Here we are. Good morning. New York Stock Exchange gap open list today. We got CF, Mosaic, Potash, AGU, but notice the majority of your qualifier of 1.00 ratio are ag stocks. So we're going to take a look at those trades where they hit the highs and when they pull back as how to get an entry and take and make sure and see what the level is. Now on the gap open down list is that the gap open down list is not that big either. There's only 3 stocks. There's a lot of indecision between the gap open and the gap down list today. And once again, markets are short-term, 5-day, from the 20-day reversal cycle to this particular last 5-day cycle is that we've hit some short-term oversold conditions within a lot of the equities and indexes. And you reach short-term oversold conditions do have bounces. And we're going to look at what those bounces are and where the rollover, where they fell on the upside. I will say to people, it's very clear that when they go up and make the intraday high, you're going to make money automatically on when they slide that bid because there isn't anything to pile drive them higher. There's not enough short interest on the indexes yet to create that bigger short squeeze as far as a longer term short interest or even a mid-term short interest. Short-term daily short interest is a different type of short interest than longer-term short interest. So trading the short interest is an art in itself. So what we're going to take a look at today is how these stocks hit their bottoms in a short-term oversold condition. But let me caution everybody, just like overbought conditions can stay for weeks and months, well, the way I see this year in the summer trade is that you're going to get these trades that go up to the next level, but they're all rolling over. They're all going to roll over. They're not going to be bull breakouts that continue because it's not a bull cycle. It's an oversold cycle that has a trade off the bottom to the short entry immediately up at the failure bar using the application. And the important thing about it is that short-term oversold is short-term oversold. You don't get short-term oversold unless the bull has started to get its head chiseled on and some of that exuberant ether is coming out of the trade. And basically understanding that these are entries with exits, they're not bull cycles to hold overnight. No, they're not. And that there will be talking a lot of how markets put in short-term bottoms and how they go back up, but then they fell and make a lower low again. And basically June has lived up to everything we said it would. So let's get ready to rumble. We're going to take a look at how the MOS makes the intraday high, how Potash makes the intraday high from their gaps, and how to short those ratio gaps. And is this where people are looking at over here based on these people right here? Mosaic and that Potash trade and that CF trade. Okay? So these are just that's just basically all of it. You got that PetroChina in there, of course, but listen, it's all related to one sector. It's not a broad base 1.00 gap ratio up. It's very, very defined to this sector right here. And that does not bode well on the NYSE. You would much rather see a broad base, diversified, sector diversified gap up list instead of a contraction gap up list, but only related to what? One sector. Sorry. That's the way it is. That's not a good thing as far as I'm concerned. Because when markets are going to put in a good bounce, you're going to see a diversified gap open up list. You don't have it.